Today, let's dive deep into SoFi, breaking down its latest performance, analyzing the key events influencing its price movements, and discussing what could be next. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The stock saw a 2.65% drop, which made for an eventful trading day. Right at market open, SoFi experienced a sharp sell-off, pushing its value down to around $12.24 before bouncing back to a high of $13.57. Despite the volatility, the recovery has been fairly strong. Personally, I took advantage of the dip, although not at the absolute lowest point. I bought in at $12.80, which I believe to be a solid entry. My holdings are split across two portfolios, and in this recent purchase, I added 289 shares. While it's not an overwhelming amount, I see this as a strategic buy considering SoFi's trading pattern. In my view, the stock is likely to remain in the $13 to $17 range in the near future, occasionally dipping below or spiking above, but gravitating towards this threshold. The drop seemed like an overreaction, largely driven by market sentiment. A significant factor contributing to the recent decline was the effect of tariffs. Both Canada and Mexico were hit with a 25% tariff, which caused some uncertainty. While there hasn't been an official retaliation from Mexico yet, Canada has already responded. Despite this, broader market trends indicate a general recovery. Investors are trying to decipher what the real strategy is behind these moves, particularly with speculation surrounding interest rates. Before the tariffs were even announced, there was already talk about lowering interest rates, something that the Federal Reserve controls, not the administration. However, many believe this could be an indirect way of pushing for rate cuts by weakening the dollar and triggering inflation through tariffs, ultimately pressuring the Fed to act. This speculation has created an interesting dynamic in the market. Regarding SoFi-specific news, today didn't bring any major developments, no new SEC filings or announcements. However, some patterns suggest market manipulation. One example is a fresh Analyst rating that set an $8 price target issued by Tim from KBW, who holds a 65% accuracy rating. It's common to see bearish analysts reiterating their sell ratings during downturns, as fear in the market provides an ideal opportunity for them to reinforce negative sentiment. On the other hand, there hasn't been a reevaluation from certain other analysts in months. This gap in reassessment leaves investors uncertain, but it's also part of the broader market dynamics. Meanwhile, short interest in SoFi has been gradually increasing, though not in a dramatic way. The latest data shows that short positions increased by 25,000 shares, bringing the total short interest to 12.41% of the free float, equating to approximately 133.71 million shares. While short selling has been on the rise, the numbers suggest a steady but not overly aggressive move against the stock. Shifting to options data, SoFi has seen substantial activity. The market recorded about $25 million in call options and $35 million in put options, with 53% of transactions reflecting optimism. The total dollar volume of options activity reached a significant $59.8 million. Notably, one particular trade stood out, a massive $8.9 million options trade executed within a short time frame. Examining the details, a $2.46 million premium was allocated to a bullish position with a March 21st expiration for a $13 put, indicating confidence in a price rebound. Conversely, a smaller $960,000 put purchase suggested some bearish hedging. This mixed strategy suggests an anticipation of volatility, commonly executed as a straddle strategy. While the market is preparing for fluctuations, the overall option sentiment leans slightly bullish. As for stock movement predictions, the options data points to a consensus around the 1450 level, indicating moderate expectations for recovery. Meanwhile, bearish traders are eyeing a sub-$12 level. High-value trades exceeding $100,000 reflect a mix of buying and selling, reinforcing the idea that while some investors see upside potential, others remain cautious. SoFi is currently trading at around 13.18 cents, fluctuating between support and resistance levels. Today's high of 13.57 cents tested a key level, and if the stock can push above 13.59 in the coming days, it could signal a breakout. Conversely, $12.72 serves as a crucial support level to watch for potential downward pressure. Considering the broader market context, the question remains, is the current volatility a direct result of a calculated strategy? Some believe this is part of a bigger plan to introduce uncertainty, weaken the dollar, increase inflation, and force the Fed's hand into cutting rates. This theory isn't new, and many analysts have pointed to similar patterns before. Whether this is a deliberate move or just coincidental market behavior, the uncertainty it creates has clear effects on stocks like SoFi. Investors need to weigh these factors when making their decisions. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.